The most important video I've made in a long time, and this is not clickbait, this is, I just uncovered a chain of events that really, if you care about your portfolio, you care about your trading performance, please watch this video from the beginning and until the end. And as I said, it's not clickbait. I just uncovered really what is about to happen in the market. And this is the reason why, actually, right now, I'm not taking any trades. If you look at, for example, Bitcoin, it's not really doing much. Ethereum, it's also, to be honest, not doing much. We're kind of in this flag pattern. And there is something unwinding right now. And I think that the market is kind of stale before a very big storm. Now, let me explain what it is. And just full disclosure, I don't have any trades in. Oh, no, I'm not even logged in. So on Bybit, I still, like, as you can see here, I didn't take any trades. So 90 days, my performance on this test account, where I'm just doing it publicly with small amount of money, it's still, up very much, but I didn't take any trades, and I also didn't take any trade on ETH. I'll explain exactly why, because what I'm saying, I want to see the move start. I want to see that narrative to start playing out. And with Bybit, just real quick, we can just pause the video, take a look. There's because you're going to trade somewhere anyway, so you might as well get these bonuses and use this to your advantage. These are the bonuses on Bybit you can get with the link down in the description of this video. And also there is a link to ETH. ETH is similar to Bybit in simple terms, but it's decentralized. So every time you're trading on ETH, you're trading privately, anonymously, a bit cheaper commissions, and you always retain custody over your assets at all times. So it's non-custodial. You always control your assets. The only drawback really to ETH, they have only 7 pairs right now, but more pairs will be added. So if you're trading some of these pairs, then ETH is probably a cheaper and safer place to be. But if you want more tools and stuff, then Bybit certainly is. So, and there is a link to ETH in the description of this video where you can actually get 10% cash back on your trading fees, which you can claim daily in your assets section. But anyway, let's get to this, because the first piece of news that a lot of people were expecting, and I told you about this before, but this doesn't really matter. What I'm going to tell you in this video really, this really plays into what I'm going to say. So really, let me cover this real quick. Fed cuts rates by a quarter percentage point as expected and sees 2 more cuts this year. So for this reason, I told you before that most likely it's going to cause a dump. I mean, okay, it kind of dumped a little bit and it pumped a bit. So we're really not going anywhere. We're literally at the same place by Ethereum, for example, where we started off. So everybody really expected 25 basis points and it happened. And now the market is like, okay, what's next? So because it was already priced in. I mean, Bitcoin has dumped a bit, but then it kind of pumped a tiny bit, and now it's at a very important historic resistance again, which again is this resistance right here, which again, people say, oh, technical analysis doesn't work. I mean, if they don't know how to use technical analysis, it's, as we say, it's not our problem. So we are at this very important resistance again, and for some reason, trading views being slow today. So it's not really doing much, but you know what matters the most, and the juice of this video, and what I've uncovered, is this right here. For once, I don't really like Peter Schiff, I'll be honest, just because he's such a anti-future of finance guy, and he's only, oh yeah, gold, yeah, I like gold, but Bitcoin is garbage. So yeah, but today, for once, I agree with him. And for once, I'm like, okay, good point, Peter. So he said, as he supposedly warned, that now that Fed has cut short-term rates by 25 basis points, which is kind of a good thing, and we wanted to see this, long-term rates are rising. So until this point, nothing matters. Long-term rates are rising. When I read this, I was like, no way. The problem is that normally when Federal Reserve cuts rates, the rates should drop all across the board normally, historically. Not always, but normally. But long-term rates are actually going up. And this, ladies and gentlemen, is where a big problem starts. The yield on the 10-year treasuries is back to 4.14%. It was down to 4.02% the day prior to the rate cut. So the long-term rates actually increased. And as he says here that he thinks that yields are headed back to 5% and Fed's going to restart quantitative easing. So short-term perspective, this is horrible because they want the interest rates to go down. If the interest rates on the long-term treasuries goes up, this is bad because borrowing becomes more expensive, which means mortgages suffer, corporations suffer, employment suffers, and everything else is because money becomes more expensive. And that's not what Fed wanted to do with reducing the interest rates. They wanted all of the interest rates to go down. And normally they do go down together, but this time they're not. And this is first piece before I give you my conclusion as to what the hell it all means. Here is the second piece. which is not that great either, because Japan's stock market crashed 2.5% as bond yields hit record territory. So in Japan, this whole situation is taking a crap. I mean, remember this big fear in the market that we had that this Japanese yen trade, whatever, would unwind? So we are back to this because Japan's debt to GDP ratio hits 260% and the highest in the developed world. So Japan is, honestly, this is it. It's going down. And rising yields means higher borrowing costs on that massive debt pile. So Japan cannot afford this no more. So markets are spooked right now that Bank of Japan might finally abandon its ultra-loose monetary policy after decades of near zero rates. So we're coming back literally to the same fear of this Japanese bullshit unwinding. So, and it's a big warning for America because US debt crossed 37 trillion with no signs of slowing. So America is in the same position basically. And the biggest problem here is that if Japan, like now I will explain what all of this means and how all of this connects. Because when 10-year treasuries are going up, it means that investors are really scared about the stock market. They're scared about the inflation. They're really, it's not a good sign at all. And when we are seeing what is happening in Japan, these things actually, I think they're connected in a way. Because Japan, they're the biggest holder of US treasuries. The only way currently, logically, how Japan could start saving itself, because it's in deep shit. Japan's debt to GDP ratio, 260%. The only thing that they can do is dump US treasuries. And when US treasuries are being dumped, the price of the US treasuries are going up, and therefore the yield of those treasuries goes up. So therefore, the interest on those 10-year treasuries, for example, will again go up. So they're reducing the interest rates on the short term. The Fed has cut short-term rates. Okay. But it's causing already for the long-term ones to go up. And if Japanese thing actually unwinds and they dump a bunch of treasuries, it's going to cause the yield to go even higher and possibly even beyond 5%, like Peter Schiff says. Which means that the only way, so this is how Japan can save themselves, and the only way how United States will be able to save themselves from this, because they're not going to be able to sustain much higher of 10-year treasury yield, simply because it becomes impossible to refinance or to do anything about their $37 trillion external debt, which it's just all intertwined and all connected. And the only way what they can do here, as Peter Schiff says, start quantitative easing. So this is a no-brainer, really. I mean, and you're going to say, okay, fantastic, this is good because it's going to be a lot of money that they will be using to buy a lot of their treasuries, their own treasuries, so they will stimulate the economy in this way, which means that the price of the bonds will go up, of the treasuries will go up, and the yield will go down. So therefore, the investors and big players and, I don't know, Wall Street will start pivoting away from treasuries and will go into high-risk assets because that's just how the money moves. And therefore, Bitcoin and everything else will flourish. And also, Bitcoin will flourish because all of this and quantitative easing will down the road again cause inflation, weakening dollar because there's going to be more dollars. It's all fantastic for crypto and high-risk assets. But, right, again, you can talk to ChatGPT. I mean, it's a no-brainer that every single time the US was going into quantitative easing, they were going because they were responding to a crisis, which means in a short-term perspective, before we get to quantitative easing, just like it was during the pandemic, we see a crash. And it can be a massive one. It can be 10%, 20%, 30%, because everybody's scared of this Japanese situation, of the 10-year treasuries going up despite the reduction of the short-term ones. And it's not great. And there is not enough liquidity in the market. So they need to stimulate, and it's going to take some time. So initially, then can be quite a serious dip, just like we're starting to see in the Japanese market right now. So that being said, what my I just want to see how this unwinds, how all of this connects. I mean, there is a small probability that it's all nonsense, but I mean, numbers speak for themselves. And I did a bit of research here, and it's everything I've said really clicks. And historically, this has never been a good thing. So therefore, short term, it would be, and again, if a crash happens, it would be, I'm not saying I'm selling my Bitcoin or anything, but I would certainly use this to my advantage to buy more of it. So if this correction happens, this could be because we've seen a very beautiful move up, and this kind of a black swan event before quantitative easing finally comes in is what we've always wanted. This could be the opportunity of a lifetime. So just mind your leverage and study this, because this is some serious shit which can really spell into a big trouble on Wall Street, but it's going to be a short-term thing because they will turn on the quantitative easing real fast, And then finally, we're gonna go into the banana phase because money will flow from every single fucking angle. So yeah, and check out, guys, this video popping up on the screen. I've done a crypto course for beginners. So if you want to learn how to trade, or even if you know how to trade already, check this out. There's going to be a lot of interesting tips on risk management and different setups and stuff. So go ahead, check it out, and I wish you an amazing weekend.